Welcome to TraderTV, your insight into institutional trading. I'm Dan Barnes, and with me today in the studio is Kate Finlayson of JP Morgan, and we will be discussing the big market structure themes affecting trading. Kate, welcome to the show.
Great to be here, Dan.
Which themes should buy-side heads of trading have top of mind this year?
Well, there'll be drivers influencing the levels of trade data transparency and shifts in liquidity patterns based on risk provision and market regulation. All of this within this ecosystem where we've seen regulatory divergence across jurisdictions. So heads of trading will have to assess what the implications of these various drivers may be for their trading desks so that they're best positioned for them.
Very good. On topic of transparency, why can that potentially be tricky?
Well, it looks like we're going to have a bond consolidated tape in the EU and the UK next year. The tricky bit comes in when you look at the transparency regime or the rules that underpin those tapes. Essentially, when a trade gets printed, how quickly. Post MiFID II review, the transparency requirements have changed so that we have landed with different rules in the EU to the UK. So you'll have a trade in a particular size, particular instrument that will be traded in the EU and printed within 15 minutes. In the UK, that same trade will be printed 2 weeks later. And in the US, a couple of months down the line.
Wow.
So you're going to have this divergence there in terms of the information that will be available. And the crucial bit here relates to market impact, information leakage.
Yeah.
So market participants will be then assessing, okay, how do I need to trade? Who do I need to trade with? And where do I trade? So it is impactful for sure.
Turning to some of the regulation, which rules will be directly impacting buy-side firms over the next 12 months?
There are quite a few, and some of them run concurrently, or certainly there are multiple elements at play, which adds complexity. So if we look at derivatives, the active account requirement under EMIR 3 is now live.
Yeah.
So EU fund managers are having to assess what they need to move across from their derivatives portfolios from a third country CCP, let's call it LCH,
Yep.
to a EU CCP like Eurex, LCHSN and others, and assess what that means for their portfolios, what that means for netting benefits that they might lose and other considerations on top of course, the basis between the two clearing houses. And then this is set against the backdrop of Dutch pension fund reform. In the Netherlands, they're moving from a defined benefit scheme to a defined contribution scheme. And that transition is taking place in tranches, but the deadline is the 1st of Jan 2028. So the Euro swaps curve will be an interesting one to keep an eye on there for sure. And then I would say another element is the focus on the basis trade and hidden leverage in the system. Whenever there are periods of market volatility, it's often the go-to to say, well, what happened there with the basis trade? And we have seen global policymakers put forward various recommendations. The FSB has put out 9 recommendations fairly recently as to how hidden leverage could be addressed. And some of those activity-based measures include minimum haircuts, central clearing. So they are just recommendations, but to the extent any national regulators look to implement them, then clearly there are some considerations there in terms of the impact for relative value strategies, the impact of the basis trade itself. And the Bank of England will be taking a look at this topic as it relates to the gilt market.
Very good. In terms of other rules, is there anything impacting buy-side firms more indirectly?
So I would say bank capital reform stands out as being the most impactful from an indirect perspective. There's been a lot of focus on what prudential requirements could be adjusted to enhance intermediation. Most people have referenced the US Treasury market in that regard, but certainly we've seen the proposal for SLR reform. Market participants are now keeping their eye out for GSIB proposal, Basel III endgame proposal. So we may see something before the end of the year, but possibly start of 2026. And depending on what we see, what's in those proposals, that could materially impact the provision of liquidity across asset classes, not just US Treasuries. So I'd say that is an indirect element. The other one I would point to, which is not always front and center, is just looking at emerging markets. We know that market participants continue to seek in the search for yield, how they can access emerging markets, even frontier markets. And so where we have policymakers looking to ease access requirements to encourage foreign investor participation in those markets, whether that's to facilitate bond index inclusions or to really enhance onshore liquidity, those requirements could then start to add up and actually make some tangible inroads for foreign investors to gain more exposure to those markets as well.
That all makes a lot of sense in terms of what firms are responding to. What are they actively doing on the desk?
Well, the automation of workflow processes can introduce execution efficiencies and can work to optimize outcomes and certainly facilitate that. So we see how firms are changing the way they engage and access liquidity, how they consume data, how they move risk, and how they manage their portfolios. I would point to direct connectivity. We have seen substantial growth there. And I would even point to how protocols are changing. So click-to-trade in particular is one that's been interesting to note. And in my team, we also look at the tech stack front, the development of EMS functionality. And I think there has in the past been perhaps more of a focus on build as opposed to buy. We do see that starting to shift as some of the third-party providers make incremental traction on that front. And then there's portfolio trading. Whether it's Liberation Day and the volatility and observations in that regard, portfolio trading in terms of the growth of it as a proportion to total electronic volume, but also the use cases. So cross-currency, cross-asset, that is expanding exponentially as well. So it is turning out to be the most multifaceted tool in the toolkit for sure. It's a really interesting and exciting space to be in fixed income markets. So it's a thrill that we get to speak to clients about these topics.
I'd like to thank Kate for her insights today, and of course you for watching. To subscribe to our other shows, including TraderTV This Week every Monday and The Vol Show every month, go to tradertv.net.